All right, let's jump right in. Every single year, the entire business world basically holds its breath waiting for one specific document. And no, it's not some flashy product launch. It's a letter. More specifically, it's Warren Buffett's annual letter to the shareholders of Berkshire Hathaway. Today, we're going to break down the 2024 edition and pull out the key lessons that makes this thing, well, required reading. You see, right from the get-go, Buffett sets a tone that is just completely different from your typical corporate speak. This isn't just some filing, it's a conversation. He's framing everything that follows as a direct, honest chat between partners. It's like he's saying, if you were in my shoes and I was in yours, this is how I'd want to be talked to. That single idea is the foundation for everything else. So let's start with that big idea. The fact that this is a letter, not a report. What does that actually mean when you get down to it? Well, it boils down to a philosophy of, I'd say, radical transparency and accountability that you just don't see anywhere else, especially not at this scale. And it all comes back to this brilliant little piece of advice Buffett got years ago: praise by name, criticize by category. Think about that. It's a way to celebrate individual wins and call out the people who made them happen. But when things go wrong, you address the problem broadly, as a category, without publicly shaming anyone. It's about being honest without destroying people. And speaking of honesty, look at this number, 16. In just the last 5 years, that's how many times Warren Buffett has used the words mistake or error in his own letters to describe his own decisions. 16 times. And look, this is absolutely not an accident. It's a strategy. While so many other annual reports are filled with what Buffett calls happy talk and pictures, Berkshire goes out of its way to own its failures. And that willingness to admit you're human, to admit you're not perfect, is exactly what builds such incredible, long-lasting trust. It says, hey, we're not going to get everything right, but we promise to always be straight with you. Okay, so that's the philosophy. But how does all this straight talk actually translate into the numbers? Let's take a look at how the Berkshire financial engine really performed this year. So here it is, the headline number, but it might not be the one you'd expect. $47.4 billion. Now, that is Berkshire's operating earnings for 2024, and it's the one number Buffett really wants you to focus on. So why this number specifically? Well, it's because it totally strips out the wild, up and down, unpredictable swings from their massive stock portfolio. This number, the operating earnings, represents the actual cash profits being spit out by the dozens of real businesses Berkshire owns and operates, everything from railroads to insurance to energy. It's the true measure of the health of the company. And if you look here, this table breaks it all down. You can see the insurance businesses just had a monster year. I mean, a spectacular year, with huge gains on both the underwriting and the investment side. The railroad, BNSF, held pretty steady, and the energy business saw some really strong growth too. It's this mix of different engines that really drives the whole machine. But, numbers on a page only ever tell you part of the story. Berkshire's whole philosophy has always been that the character of the people running the businesses is every bit as important as what's on the balance sheet. So that begs the question, how do you actually put a price on great leadership? Buffett answers that with this incredible story about a guy named Pete Legal. Pete was the late founder of Forest River, which is a recreational vehicle company that Berkshire bought way back in 2005. So when they were buying the company, Buffett asked Pete what his salary should be. And this was his answer: $100,000 a year. I mean, it's just an absurdly low number for a CEO of a multi-billion-dollar company. Right away, it showed that this guy just got the Berkshire culture. But then came the brilliant part. Pete tied his own personal fortune directly to the future success of the company. He wasn't asking for a big paycheck. He was betting on himself to grow the business for Berkshire's shareholders. And for the next 19 years, as Buffett says, he shot the lights out. And that right there is the key lesson. A manager like Pete Legal, someone who is talented, driven, and perfectly aligned with shareholders, is a priceless asset. You can't stick that kind of character into a spreadsheet, but it's one of the most critical ingredients in Berkshire's secret sauce. That story about Pete Legal really gets to the heart of what this company is all about. It is built for the long haul. So let's zoom out a bit and see how that long-term mindset shapes their entire investment strategy. Berkshire basically puts its capital to work in two main ways. On one side, they own companies outright. Think Forest River or the BNSF Railroad. This gives them total control, but it's pretty much a permanent deal.
On the other side, they buy small pieces of great public companies, stocks. This gives them way more flexibility, but a lot less control.
And we're not talking about just any stocks here. I mean, we're talking about massive stakes in some of the most iconic, dominant businesses on the entire planet. So while they control all these subsidiaries, these partial ownership stakes in giants like Apple and Coca-Cola are a huge, huge part of Berkshire's value.
So, if we had to boil this entire, sprawling document down to one single, essential lesson, what would it be? For me, it all comes down to the simple power of patience.
And here it is. This might be the single most important sentence in the entire letter. Mistakes fade away, winners can forever blossom. This is the golden nugget. It's the core idea that explains decades and decades of success. So what's he really getting at here? It's the incredible, almost unfair math of long-term investing. See, when you make a mistake, the absolute most you can lose is 100% of what you put in. But when you find a true winner, well, its potential for growth is pretty much unlimited. The magic of compounding means that one truly great decision, held for decades, can create returns that just completely wipe out all your other inevitable mistakes combined. Which kind of leaves us with one final thought. In a world that is obsessed with speed, with trading, with constant noise and action, maybe Berkshire's most powerful, most durable competitive advantage isn't its pile of cash or its famous brand. Maybe, just maybe, it's the simple, profound, and all too rare ability to just be patient.